Okay, in this lesson I'm going to show you an advanced technique on how to use Fibonacci to your advantage on a reversal. So what we have here is we have the market making a high. It pushed down, gave a little hypertrader signal, came down, gave an official signal, which was a very tight, I played this one really tight actually, so very small margin for quite a lot of potential to the upside here, easily a 1 to 2, 1 to 3 risk reward trade. I didn't get it, it broke it, right? Because why? The market is likely reversing. So I'll show you how to play the reversal on this one. So what we're gonna do is, as this market makes a low from the high, it breaks over the white ray, which is my sign of reversal, comes down, clearly breaks it, right? Breaks multiple levels, even comes down in here, back in here and touches this, right? What we can do is we can take our Fibonacci. I'm going to go from the very top of the market that comes down to this, and I'm going to take it to the bottom here and drag that across. And then what you have here is you have a zone that you're looking to take a trade from, which would be from the 50% level. You'd put a stop at the 79% level, and you would look to get to at least the 35% on this trade. So this would be quite a decent little trade there, as you're risking 34 ticks. So at 18,539, in fact, I believe you can do this right on here as well. So you can do a fib retracement here if you want to see where these levels are. Make sure that shows it. 38.206.5. Yep, right to the bottom of that. There you go. And so it shows these levels. Now I don't like the fill or the trend line, any of that stuff. We don't need any of that nonsense. I don't need any background. Prices, levels, labels, maybe to the right instead. I think that looks a little bit better. Okay. And what happens is, as price comes back here, there's levels on here we don't need the 38%. 786 we do want. And we can even take off the 6-1, although that's a very valid level for reversal right there. And so as the market comes back here, if it comes back, you would look for a sell entry from 18,539 here, using the Fibonacci tool. So you can see I've got my box drawn up. This gives me a 1 to 2.89 here from this level if it does in fact reverse from that level. So you can see the price coming back above. And I'm gonna erase this little 38% here. We don't need that on there. There we go. Okay, so as this market, this is on the 1 minute and looking to take a sell as this market is potentially reversing. Now, if the market, the Pathfinder basis stayed flat and the market recovered back above these levels, it's likely going to continue to the upside. But if you wanted to give yourself a opportunity for a very good sell, if it gives you the move, it would do it from your golden ratio zone, which is 61% to 50%. That's what we call the sweet spot on Fibonacci. Okay, so we'll hang in here for a couple minutes, and when the market comes back to this, which should be happening right here in the next minute or two from the looks of it, if we get a nice rejection on the 1 minute, we will be taking a potential trade, which I believe we can. Sometimes you're able to set up your trade ahead of time. If you set a market limit, you're able to do that. But we want market execution. Okay, market is coming back to that 50% level, and we're potentially even rejecting right off of here. I'm going to take my first sell here. You can see I'm risking $450 to that level, which my normal risk is 500. So 5 contracts is just right right now. Now the only thing that's not on here is we want a, we actually need a negative 0.38 would be our target right there. And what you can do is you can modify these on here as well. Like if that's my target, I would make that green for the money line. I like this as my sweet spot. So from there to there, that's my sweet spot. And then we also don't need this line right there. And then we can make our 786 red because that's our stop. Okay. So now I have my zones labeled out here. I have the level which the market could come back to. Now it could wick right from here. You know, sometimes it just comes back to that basis where those previous orders are and buyers are trapped and want to get out. And so that relieves the pressure right off the basis. It's even better when that basis is right around the 50. It just gives it that much more confluence. So we're in from right here to here to here for a 1 to 2 risk to reward ratio trade. And as you can see, market is starting to take off from there. And hopefully this will continue down and give me the trade I want, but I wanted to show you that sell entry on the reversals. Sometimes it comes to the basis, sometimes it comes to the 50, sometimes it comes to the 61, sometimes it comes to the point of control. If there's a ton of orders over in here and the market has stitched for a little while, you'll have a lot of buyers trapped in there and they want to get out, so it'll come back to that. So you can either put your stop on the 79, or depending where you get in, if you want to manage risk even better, you would put your stop actually at a higher high if you're taking a higher position. And that just changes it so you're getting a 1-to-1 risk reward. This is actually 1 to 1.3, so it's still a better win ratio than if you were to lose on that one. And it kind of lowers your chance of getting stopped out because sometimes the market will come back up here and test these levels, and you'll take an unnecessary loss. So if you want to lower risk, maybe make a little less, but stay in more trades, put your stop up above the previous high on a sell. Otherwise, you would have your stop right here for the aggressive play at the 79%. So we'll let this run. It's looking good, and we're sitting in profit here, and hopefully that works out. And that's how you take a trade for a buy. Now, let's go and go to the flip side for the sell. Right here is the low. It breaks the white line right here. Drag that up to the high, and here's a perfect example of how it hits that 79 and turns around. So in this case, you would have been stopped. If you have your stop loss even a little bit lower or down here, then it keeps you in the move safer. So there's a perfect example right there. Now let's go look for some other buys here to show you an example. Right here, I'm gonna go from the low that makes the break. So this starts the break right here, okay? It's the failure to make the low. I'm gonna drag that up to the high right here, which is what broke our white ray right there. Take it up before the pullback. Market comes right back to the sweet spot, and right there you would have hit target. That's a perfect example of a great trade. Very, very similar to the one right now on how that's playing out. Just like that. So that's how you would draw it. You go from the bottom to the top on a when you're going to the other side. So that's how you would use Fibonacci. You can take pictures of these levels, copy it, that's fine. But that 50 to 61 is your sweet spot entry. If you really want to be safe, put your stop loss down below, and your target would be that 35% extension for take profit level 1. You can go beyond that. You can go to 61 as well. You can see that it did hit here. And you often will get from 35, you'll hit the 50 or the 61. So you can also set those targets a little bit farther as well. And so that's how you use your Fibonacci, from the failure to make the low down in here to the high point before price comes back after it's broken your white ray, which would have been right here. That was the trend level that broke. Pullback, 50 to 61%, off to the races. Hit that trade all day long, get that money. We'll see you on the other side.